Maruti has seen a good recovery on a YOY basis as far as their September quarter performance goes. Do remember that they had already seen a good recovery in their volumes, especially driven by small and entry car segment, and the trajectory is something that has helped them perform better as well. On a YOY basis, they've seen a healthy expansion on most fronts, especially if you look at the revenue, which has seen a very solid growth YOY. Almost 10.5%. Even margins have expanded from 9.5% to 10.4% levels. Yes, it has been a bit disappointing as far as the street expectations and the ET Now poll goes, but nevertheless, they have seen a decent uptick as far as the margins goes. Now, what essentially has the management said during the conference call? Firstly, they've accepted the fact that despite weakness, despite a challenging environment and sequential and gradual recovery, they've seen a good Q2 performance compared to last year. Share of petrol vehicles has gone up quite substantially. CNG share has also increased quite a bit, and given the government's push for CNG vehicles, they've seen a good demand increase as well in this particular segment, and going forward as well, Maruti does plan to boost it and push it in a big way. The production, they said, is back to normal. October is likely to be a strong month, of course, given the fact that Navratri season, which is quite critical for sales, especially in the northern part of the country, that is panning out quite well. Gujarat plant is also running in 2 shifts. They will see sales comparable to last year's October this year as well. So nothing to worry about as far as festive fervour is concerned and the sales for this critical season is concerned. It's tough to predict demand, however, post November, post Diwali, Dhanteras, how things will play out. Monsoons have been good, crop yield has been very robust, and that's something that's likely to aid the rural uptake as well going forward. However, talking about the urban demand scenario, Chairman R.C. Bhargava was a tad cautious. He said it's quite uncertain how urban incomes, purchasing power will play out given the economic downturn still continues in most metros and most urban areas. They don't see a spurt of very strong demand coming by from the urban market, at least at this juncture. They've not given any specific guidance for the second half of the year. They want to wait and watch to see how recovery pans out. However, at least till December, Mr. Bhargava said that they do not see a demand slump. And despite exiting the diesel segment, they have not seen any significant loss in market share. The shift towards smaller car continues. Do remember that since Q1, in fact, end of Q4 onwards, the management has projected that there will be an increased tilt towards entry-level cars, and they have seen a good uptake in their own product mix as well. They've seen a 4% growth within their mix as far as hatchbacks is concerned. It now comprises of 62% of their sales. Mr. Bhargava also said, why is this demand so resilient and why this sudden resurgence has happened? Because typically what happens in a down cycle year or following a downturn year is that there is a lot of pent-up demand, and right now what we are staring at is almost 2 consecutive years of down cycle. So there's a lot of pent-up demand because of the postponement of purchases, and of course there's heightened preference for personal mobility as well under the new regime in the post-COVID era. Low interest rate, easy financing availability from banks is also something that's aiding demand. So they've not predicted much as to what will happen in the second half, but till December at least they do not see major hiccups as far as demand goes.